Welcome back, everybody. We have a great show. So at the moment, I just want to highlight a few things. Yes, we're excited about ROPSTEN, but there's a couple, other extenuating circumstances that are meaning that the whole crypto merge could go down the toilet. So make sure you stick around and find out exactly what I'm on about and why I'm saying this. But first things first, AJ, how are you today?
Yeah, I'm good, thank you. Got some exciting stuff today, some on-chain stuff as well for Bitcoin, so we'll get onto that in a moment.
Absolutely. And some gorgeous charts as well.
Yeah,
I hope so. I'm looking forward to
as
those.
always. Yeah,
I
as
always do. Okay, well, look, guys, I'm going to just jump straight into this here. So what I'm showing you is not supposed to be that. It is this. We're going to get onto that a little bit later. European Central Bank. I'm never going to let anything about rate hikes go. I love global inflation. I think it impacts the market. So just leave me alone if you don't like it. So what we are focusing on now is no more power surge. So its community is celebrating as the ROPSTEN testnet merge goes live, which is very, very good. Now, I know this was live, I believe not too long ago. It's not immediately or hasn't just gone. But this is the community very much getting excited. So for those of you who haven't heard, the ROPSTEN testnet will successfully transition Ethereum from proof of work to proof of stake. Now, the ROPSTEN testnet, because it's just a test net, not the main net, is kind of a dress rehearsal for the Ethereum blockchain. Now, everyone knows proof of work, blah, blah, blah. Very bad for the environment. Lots of people looking to ban it, even New York. Now, after ROPSTEN's transition testnets, they always name them so weird, don't they, AJ?
Yeah.
It's so annoying.
They make it so hard to pronounce.
I know, all the time. ADA does it, Ethereum does it, everyone. I'm trying to talk about this stuff, but I feel like I need to learn Latin or something. But Gourley and Sepolia are scheduled to transition to proof of stake prior to the mainnet transition, according to the Ethereum Foundation. Now, this is just everybody saying well done to each other. Jonathan Mann, he celebrated by making a 17-minute song, as you see here. Very much dedicated to the cause, that guy.
Yeah, 17 minutes.
Exactly. I know. Roberto Nicholson, founder of Metaverse, described the event as a huge milestone, which I do agree with, and a historic event. He believes that this is one of the most important events in the history of crypto, as the mainnet integration to proof of stake depends on the testnet success as well, which is absolutely true. And one of the main hindrances around crypto is the energy consumption. And if we have Ethereum, which is low energy consumption, if they can also manage the gas fees through scaling solutions or whatever they use, we could be onto something great here. But speaking about layer 2 scaling solutions, I have some very bad news for you. You guys might be familiar with this little beauty of a chart. It's what trend is this, AJ? Is this an up or a downtrend?
Very clear downtrend.
Yeah, no, it's not great. So it's, as you can tell, it's obviously not a beautiful chart. This is actually, in fact, optimism. So it launched, I believe it was last week. And as you can see here, they messed up the airdrop and the token fell 40%. So let's have a look why. So what Optimism have said is, why should Optimism Collective continue rewarding these kind of mercenary actors who will dump their tokens on first sight? Pump and dump. They basically don't want to, give an airdrop to people who are going to pump and dump. Why should any future airdrops reward these addresses? Now, it didn't go down very well, shall we say. And so, that's why it plunged at a massive 40% drop, as you see down here, from boom, just straight down. Not very good. Now, this was kind of last week.
They just took the pump out of it, didn't they?
Yeah. It's not even a pump and dump anymore.
It's just a dump now.
Yeah. Oh, that's a good one. It is. It's just a dump, and it hasn't really recovered, has it?
No.
But anyway, so that was a very bad start for the Ethereum 2 scaling solution. Now, what has happened now? We're having a look at the most recent news. Is that we see they have lost 20 million tokens after a layer 1 and layer 2. The layer 1, layer 2 was basically confused. There was a smart contract I'll show you exactly what it says in a second. But someone exploited this and took the 20 million themselves. He was considered a bad actor, which, if you steal 20 million tokens, although how much were they worth? Still about 20 million pounds, or dollars, I should say. Still a healthy, healthy chunk of change.
Yeah.
But the honeymoon period, and as you've seen, it wasn't a great honeymoon. The honeymoon period for the optimism layer 2 scaling solution has been cut short. So that's there again. The 20 million OP tokens have been lost. The exploit took place on May 26th, but has only just been reported to the community. Now that is embarrassing. 1 million tokens valued at about $1.3 were sold on Sunday. An additional 1 million tokens valued at about 730 were transferred to Vitalik Buterin's Ethereum address. Now, the remaining tokens are dormant, I should say, but could be sold at any time or used to sway governance decisions, i.e. hold them ransom. Now, I'll kind of go through this quite quickly. What we want to have a look at is what I've highlighted just further down here. So I'll just give you an overview. Basically, it was the winter mute. So winter is here. So in a Thursday message to the Optimism community, Wintermute took full responsibility for the exploit. The firm stated that it would perform OP buybacks equal to the amount of exploiter sales as a means of making best efforts to smoothen the effects of price volatility, which is good. They're showing that, look, guys, we messed up. We did make a mistake. And in fact, we're going to do something to try and remedy that, as a whole. One thing that I do want you to just quickly read through, and we'll go through this together, is this. So as soon as Wintermute became aware of the problem, it began a recovery operation with the goal to deploy L1 multi-sig contract to the same address on layer 2. But its attempt to remedy the solution was too late. And that's because someone had already done this. So an attacker was able to deploy the multi-sig to layer 2 with different initialization parameters before the recovery was taken, before the recovery operation was completed, and took control of the 20 million tokens. So not great for Optimism. It hasn't had a good run. And to be honest, it's very, very bad for this overall space. For layer 2 solutions, so many hacks have been happening within crypto at the moment. We see Chris Bleck, host of the Proof of Decentralization podcast, said the team had considered but rejected regaining control of the funds because that essentially would mean that they're not decentralized. They become dangerously centralized, which is not great. Now, OP investors have responded negatively to the update, and the price is down around 31%. You can have a look through their thread as to everything that they're doing at the moment, and they have come out and said, hey, look, guys, this is what you have to be careful of. So I would recommend, if you are staking any coins, if you are involved in any of these scaling solutions in any way, i.e., borrowing, staking, becoming liquidity providers or whatever, just have a look through this and make sure that you are taking special care with these. And I just want to kind of finally wrap this up, where again, we're talking about Ethereum DeFi Contagion. So this is a story of staked Ethereum through the Lido protocol, where basically you give ETH and you get staked ETH in return. So this is, for example, if the switch to Ethereum 2 gets delayed, i.e. that's what we're talking about here with the whole ROPSTEN, if it gets delayed, this could cause a massive liquidity problem across DeFi platforms. Using Celsius Network, a crypto lending platform that offers 17% annual percentage yields. If the customer starts withdrawing from Celsius, they will sell their staked ETH. Celsius has the liability of 1 million Ethereum, so 228,000 are inaccessible until the merge. So that essentially means that you could cause a run, because if 30,000 are lost and this many are staked, so everyone wants their staked ETH back, then you're going to have a certain amount of ETH that you just can't get out. And if you can't take your ETH out, that's going to cause a massive panic. So staked ETH might not depeg, but the risk of DeFi contagion in a crypto bear market is high. So people start realizing they can't take their ETH out. Let's say, there's a delay and the staked ETH is not unlocked until Ethereum upgrade is done. Then there's going to be a bit of an issue. And, we can look at big forms like big firms like Swissborg, for example, who could be in a bit of trouble with this. Now, how is Swissborg paying daily yield on these assets when the yield from staked Ether is locked along with the principal? So basically, they have some money, they're paying it out, but if it's delayed, they might not be able to pay it out. People then try and panic. And you saw this during the Luna issue here. So this is where the staked ETH is supposed to be pegged to normal Ethereum, but that faltered. Now it's back to normal and it's okay. But we can see how a little bit of panic in the market, if there's a delay in Ethereum, could send everyone into a bit of a stress, should we say.
Yeah.
But that's everything from me for the moment. I want to have a quick look at some of this on-chain stuff that you have.
Yeah, so if I share my screen, so this is the Maya multiple model. The Maya multiple model is an oscillator defined as the ratio between price and the 200 DMA, which is the daily moving average. Therefore, the Maya multiple represents the deviation from long-term average price as a tool to gauge overbought and oversold conditions, incorporating data points surrounding, Bitcoin's lifespan. So, following the original analysis, oversold and undervalued conditions, have coincided with the Maya multiple falling in the range of between 0.6 and the 0.8 level, which the 0.8 level currently sits at around $33,700, and the 0.6 level is currently sat at around $25,700. These multiples are applied to the 200 DMA, the 200 daily moving average, in the following chart to demonstrate the undervalued zone according to the Maya multiple, which is, like I said, between the 0.6 and the 0.8 level. Throughout the past four bear markets, the market price has entered this value range in two distinctive phases. So we've got phase A and we also have phase B. So phase A is early in the bear market as the initial, post all-time high sell-off causes all the investors to panic. We see that in the chart. So, post all-time high, we see those massive, panic dumps in the market. And then you have that phase B, which is the later stage, and is what I believe, we are in at this current moment in time. Phase B is the late stage of the bear market as a market enters a bottom formation and has, capitulation. And that's, what I think we are currently in at the moment. So if we have a look at this Maya multiple model on the screen right now, you can see the four previous times we've had that phase A, and then we've had that phase B. That was back in 2014 and 2015, 2018, 2019, same thing. And 2020, we had the exact same thing. And, we are seeing that now. We've had phase A and we are in that, phase B, that phase B now. So it doesn't give us an indication that we are at the bottom. It just gives us that, more confidence that a bottom is looming, or a bottom could have already been in. So a bottom is very close, or it has been in. And in the current market, price has been hovering inside this value zone, like I said earlier, between the 0.6 and 0.8 level, which is between the $25,700 level and $33,700 level so it's been hovering in this level since the 5th of May. More closely resembling, that phase B, what I just said, of the bear cycles, and the, possibilistic view of Bitcoin's price having a more, we've only been below this Maya multiple for 7.9% of trading days. So we are close to it now, and we have been below it before. It's only been, as I said, 7.9% of trading days. We have been below this red line here. So if we do see more price action towards the downside, because we are very close to it now, there is a possibility that we could drop below that. But if we do drop below that level, I don't expect us to be below that level for long at all, because there is that 7.9% trading days below that level. So, in history, we haven't traded below that level for much time at all.
For very long.
For very
that's
long,
the thing.
exactly.
Some people are saying about, we're going to go, it's going to be like a proper winter, we're going to be down around 20,000 for, a good few months. I saw someone the other day mentioning about, being down below, I think it was below 30 until I think it was the middle of the halving, which is like next year.
Yeah, and that's a possibility. The previous ones, they've lasted much longer than others. So we don't really get given sort of a time frame of how long that this can go on for. But this is just signaling to us that the bottom is either in or is very close, and that's what brings me on to. If I just change this quick to the realized price model. The realized price model is the former macro indicator that maps cycle bottoms. The realized price is currently trading at $23,600 and represents the estimate average cost basis of all coins in the Bitcoin supply based on the price when they last moved on chain. In previous bear cycles, when the spot price traded below the realized price, it signaled elevated probabilities of the macro low, being established. Historically, the overall market's cost basis or realized price has been a very sound cycle support level, with 84.9% of Bitcoin trading days closing above this level, and in other words, only 15.1% of trading days have closed below this realized price level, which is particularly in confluence with the Maya multiple of 0.8. So we haven't traded below this level for many days at all. We are close to it. You can say we are close to it. $23,600. We're not too far away from it at all. In the previous bear markets, we have dipped below this realized price model. So there is a possibility that we can still, drop below this level. So we do have to take that into account. $23,600 level is a possibility, and that brings me onto the charts about what I've been talking about with the 200 MA, which sits currently at $22,300. So there's still a possibility we can come down to that level, but there is a lot of bullish signs coming in. If we continue this price action that we're seeing currently, there is lots of bullish signs coming in, because we are holding this very, very major support, which I've been talking about for a while. We are still holding on to it, maybe by a thread, but we are initially holding on to that support level. And we're seeing a slight bounce off of the support of this falling wedge that I've been talking about for a while. And what I'm looking at is for the price to bounce off this level, coming to test that resistance. That's what I would like to see. But yeah, as I said, a bottom is looming if it's not already been put in. But I am, expecting the price to sort of consolidate for a bit longer, especially on the daily chart. If I just bring you to this diamond pattern that we were looking at a few videos ago, last video as well. I've been talking about, I'm expecting the price to consolidate, within this diamond pattern, and then potentially break towards the upside, because it is a bullish pattern. That's what I'm looking at. And yesterday we did bring this to your attention that exactly a year ago, we were seeing the exact same thing we're seeing right now. So we've had that pullback in May. We've had consolidation throughout June and July, and that's what we've seen this year as well. We've seen throughout May, we've had that massive pullback. And then sort of June, we're seeing that consolidation. July, we could continue to consolidate throughout July, and then maybe get this breakout of this pattern, which will bring us up to that resistance. So, the bottom is close, but, as of right now, I am unsure if this is the bottom. There is still potential to be more downside. But in the shorter term, if we do break out of these bullish patterns, then there can be some, shorter term upwards momentum, which will be great for Bitcoin.
Yeah, absolutely agree. I absolutely agree. And it's, you know, it's very hard to tell. No one can predict the future.
Yeah,
And obviously, you know, we always try and make sure that we have as much data as possible to kind of
yeah,
understand. And technically, yeah, you know, we are, like you said, you know, we've said it numerous streams. We need to break above that previous high, you know, in order to actually get a
yeah,
bit of like some serious confidence. And I think once we
yeah,
do that, you know, that, you know, at the moment it seems like a big jump to go to what, 47 or whatever it is, but once
yeah.
we're there, the next leg up is you know, I imagine going to be extremely high.
I do agree with
I
that,
would say
but
an all-time high
yeah,
if we
yeah.
begin pumping that hard.
Most definitely, because if we break out of this falling wedge, then the price target is in fact all the way at the top, which is at around 65,000. That takes us very, very close to that all-time high. Which there'll be so much FOMO when we start getting up to these higher prices, which will ultimately drive that price to all-time highs. But as you said, for us to flip bullish, we need to break that $47,000 level, but that may change. We need to what I want to see is creating another lower high, and then having a slight pullback, and then we have another lower high to break. Once we break that trend, then we can flip bullish because we've broken this lower high trend that we are seeing, which is a very bearish trend. But once we break that, then we can start flipping bullish again, because then we can then form a upwards trend, which long in the future will turn bearish. But for the sort of the next maybe year or so, if we do break this lower high trend, then we will most likely have an upwards trend. Okay, and then that's when we will have higher highs and then lower highs, which will look something like that. It's a bit messy, but that's what it will look like. And hopefully, that will take us to all-time highs. Hopefully, 100k. But yeah, we are a long way from that. I think. I think we need a lot more consolidation, and yeah, to break out these bullish patterns.
No, I agree. And keeping that on there, so I'm just having a look at what Devon Smith is saying in the comment section. So there'll be a lot of FOMO buying macro big bag holders around. Oh yeah. So I mean 25k, of course. I mean anyone with a spare bit of cash who actually likes Bitcoin, 100% would be getting in. I mean, at least I would think.
Yeah, I wouldn't say they're FOMOing in. I would say they're just being very smart.
Yeah, well, yeah, true. Yeah. I mean, when someone says, "Oh, what did you buy at 25k?" I don't want to say FOMO on that because I'm a genius.
Yeah.
What's the price now? 10,000? Shut up. But keeping that on there, so Devon, I saw you mentioned, predicting the price is easier than the time taken for sure. And this is why I just want to kind of touch on, I actually kind of agree with, your chart is obviously very messy. It's very freehand, there, AJ. But look, it's actually not a bad prediction in terms of time, because that's brought us up to maybe the middle of next year. Now, I've said before that I think there will probably be a pump by the end of the year. Now, I'm not going to say it's going to be a pump to an all-time high, but I just want to have a look at this in the wider. So we need to look at global, should we call it global inflation worries, global, worries about everything ultimately. And look, so what we're seeing here is a massive sell-off across the market. Obviously, this is the pre-market for the US, and this is off the back of yesterday. The Indian central bank has said they increased rate hikes more than expected. The European Central Bank has just increased their rate hike by 25 basis points for the first time since 2011. They haven't raised interest rates ever since then. And they're going to end their bond buying program of 20 billion euros per month in July as well. Now, they're also tightening monetary policy to try and tame inflation, which hit 8.1% last month. So it's pretty crazy. And looking at that into the grander scheme of things, we have that news. We have a lot of things going on in the world, but also I think right now the markets are going to be down for a couple of months. I would say throughout Q3 we'll see the housing market in the US begin to drop, and I think we're then going to see a lot of the stocks drop, and then I think we're going to see the whole crypto market kind of stay pretty much stagnant or drop down to that kind of 25k level. But I see towards the end of the year, with what the US are doing, they've increased their interest rate hikes. They've got them pretty much scheduled. The European Central Bank are doing it. Central banks across the world are also doing that. And the US have quantitative tightening on their side, which they're beginning, selling $47.5 billion worth of bonds and treasuries, more mortgage-backed securities and treasuries, I should say. With all of that in mind, I think over the next couple of months, we'll see that inflation level come down, which is one thing that we need to be careful of tomorrow. That's coming out, CPI print from the Fed, so watch that tomorrow. But we're going to have all of that, and I think over the next couple of months, inflation will come down, investor sentiment will begin to rise, and I think we're in for a rally probably around about November's time of this year. I'm not going to say it's an all-time high rally, everything's great, but I think we're going to see a lot of alleviation off of the kind of pressure we all feel on our necks in the investing world. And with sort of the time frame, from the 2018 bear market, from the bottom from there to get back up to all-time high, it took 714 days for that to happen. So getting back to all-time highs now, I don't see that happening. I would like to say it would happen this year. I just don't really see that happen, but I do see the price, maybe getting up to that $45,000, maybe $50,000 level, and then next year, then we can maybe talk about all-time highs. But it's going to take us a while, I think, to sort of get back to those all-time highs. It's not going to be something quick, so you just got to bear that in mind. Yeah, absolutely. So there we go, guys. That is everything. As always, drop a like if you enjoyed the video and subscribe to the channel for more content like this.
Thank you for watching. I hope you enjoyed.
Thank you very much, guys. Take care.